Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, while dropping the tightening bias in the statement and adding a slight pushback against the March rate cut. The latest US GDP beat expectations by a big margin. The US PCE came mostly in line with expectations, with the core 3-month and 6-month annualized rates falling below the Fed's 2% target. The US NFP report recently beat expectations across the board by a big margin. The SM manufacturing PMI surprised to the upside with new orders index, which is considered a leading indicator, jumping back into expansion. Similarly, the ISM services PMI beat expectations across the board, with the employment subindex erasing the prior drop and prices paid jumping above 60. The US consumer confidence report came in line with expectations, but the labor market details improved considerably. The market now expects the first rate cut in May. In Japan, the BOJ kept its monetary policy unchanged as expected at the last meeting, with interest rates at negative 0.10% and the 10-year JGB yield target at 0%, with 1% as a reference cap. The Japanese CPI eased further across all measures, which makes it even harder to expect a rate hike from the BOJ anytime soon. The latest unemployment rate ticked lower, hovering around cycle lows. The Japanese PMIs improved for both the manufacturing and services measures, although the former remains in contractionary territory. The Japanese wage data missed expectations again recently, although there was a pickup from the prior reading. The Tokyo CPI, which is seen as a leading indicator for national CPI, fell much more than expected recently. The market expects the BOJ to hike rates in June. Now, on the daily chart, we can see that USDJPY bounced here around the red 21 moving average as the buyers piled in with a defined risk below it and broke the resistance at 148.80 following some dovish comments from BOJ's Deputy Governor Uchida. The buyers should now have even more conviction for a rally into the cycle high and will look for deep buying opportunities on the lower timeframes. On the 4-hour chart, we can see that we have now resistance that turns support, and we can also find the confluence with the trend line, the 38.2% Fibonacci retracement level, and the red 21 moving average. This is where the buyers are likely to pile in with the defined risk below the trend line to position for a rally into the cycle high. The sellers, on the other hand, will want to see the price breaking below the trend line to invalidate the bullish setup and position for a drop back into the 146.60 level. On the 1-hour chart, we can see that we have a bit of a consolidation here now around the 149.25 level. If the momentum remains strong, then we will likely see the price breaking higher, with the buyers increasing the bullish bets into the cycle high. Conversely, a break to the downside should take us into this support zone, where the buyers will start to position for another rally and the sellers will look forward to a break below the trend line.